Hi everybody, this is Stephen here from Share Navigator with a stock market update for the week beginning March the 13th, 2017. So we'll go through our existing stocks. So the first two up, we know already we've sold Southwest Airlines and Apple. And we did quite well out of them in less than 8, 9 months. We did a 34 and a 39% return respectively. We're still holding Royal Caribbean and we're up 30% in the stock. It's currently trading at 97.25, and our view is that we're not going to sell that till it gets to 110 at the moment. Now, of course, if the fundamentals change in the company, that target price can change. But right now, we see $110 target price in the stock. Striker has actually hit our target price of 130, and it's right at that at the moment. So we're probably going to sell Striker this week. We were probably getting a little bit too greedy last week. It got up to 132, I think, at one stage, and we felt we might be able to stretch it to 135. Probably should have just sold out of it, but it's at 130 now. And again, we've made a nice 31% return on that. Whirlpool and Abvai have started to move for us lately, which is great. They were really laggards in the portfolio for a good while. So we're up 13% in Whirlpool, but we're not going to sell that. We feel there's a lot more upside there, so we'd be looking to get out at 210. And Abvai again is just started to move recently. Be looking to get out at $90. So the market seems to be appreciating Abvai at the moment. It's starting to make a bit of a move in the last number of weeks in particular. So I just want to remind you, when we first bought Southwest Airlines, it actually fell after we bought it. It went down even as low as $36. So when you're buying stocks, it's not like trading options. You're in stocks for the medium to long term, and you've got to believe in the fundamentals and invest in the fundamentals. And it was the same with Apple. Like we bought Apple at $94. It went as low as it went below 90 at one stage. So what I'm saying to you here is just be patient, and you have to be patient with these stocks. And Whirlpool and Abvai are exactly the same story here. Took a while for those to start moving, and now they're moving in the right direction. The next two, the reason I have them highlighted in orange is because they're losing on us. Gilead, we all know that they had a terrible earnings report recently. We had to reforecast down their target price. We had an original target price of $92. It's down to 75 now. So we're in the stock at 84. We're expecting to exit this at a loss at the moment. And we're currently down 17% on the stock. So during the week, it had a really bad week last week because, the word coming out of Washington was that they're going after the pharmaceutical companies and going to try and get the drug prices lower. But this story has been going on for 20, 30 years. So I think that's just creating an opportunity, to be honest. Not necessarily in Gilead, but in the pharma sector in general. Target as well, we've reforecast it down to 65. We're in it at 61, 62 if we get a sign on April the 24th. So remember, we position ourselves in this stock with a short put at the 62.50 strike. So in other words, we insured the value of somebody else's shares for 62.50 and got paid a premium. So our break even on this will be 61, 62. At the moment, it's down at 55.36 because again, earnings were terrible. But we still think, $65 in the next 12 months is a realistic target. So we're not panicking on that just yet. So going into the stocks that we're keeping an eye on and we like, we've got Honda. It's currently trading at 31.05. Our target buy price is $30 here, and our target sell price is 36. With a 2.74% dividend, we see 12-month upside there of about 22% if we get it at our target price. So the key lesson with this here, guys, and a really basic mistake that retail investors make is that they chase the stock up. What you've got to do in a non emotional sense is evaluate the company, identify your target entry price and what your target sell price is. And one of our golden rules here is that unless there's 20% possible upside, we're not interested. So, as you can see, all of these stocks that we have here have 20% potential upside, but only if they get down to our target buy price. If we buy them at their current price, we mightn't get that 20% upside. So, for those particular reasons, we'll be patient and wait till we get to our target price. If the stock doesn't get down there, it doesn't get down there. We won't buy the stock. Novartis, we're looking to buy at 70. We've a target price at 95. So, there's potential upside of 40% there, paying a nice dividend here. eBay has been moving nicely towards where we want to go. It's currently at 33. We're looking to get in there at 31 and get out at 38. So that would be a 23% upside. Qualcomm, target buy price is $53, currently at $58.64. Possible upside there of 26%. Ford, we see possible upside of 30%, FedEx, etc. So what I want to share with you now is, rather than sitting here waiting and looking at the share price every day, I want to show you two very good ways of positioning yourself in these stocks. So the first way is, as you know, I love to sell put options on stocks that I want to buy. And when you sell a put option, ultimately what you're doing is insuring somebody else's shares for the value of what you want to buy them at. So for example, let's say with Qualcomm, let's say we wanted to buy them at $53. So we would sell a put option at the $53 strike price. What does that mean? It means we're insuring somebody else's shares to the value of 53. And the great thing about it is we're getting paid an insurance premium for agreeing to buy a share that we want to buy anyway at $53. Now, the downside of the strategy is, if Qualcomm doesn't drop below 53, we won't get to buy the shares. We just keep the insurance premium. But we'd be happy to do that. If you think about it, we weren't going to buy the shares anyway unless they drop below 53. So every month we can be taking in an insurance premium on Qualcomm. So that's one way we do it, through the short put strategy. Another way, if you're not comfortable trading options or your account isn't big enough to be able to buy at least 100 shares, you can use what we call the rebalance tool in the Interactive Brokers website. So remember, when we're looking at stocks like this, we emphasize the importance of risk management. Don't put all of your eggs into one basket. And as a rule of thumb, don't put any more than 5% into any one stock. Now, some stocks you may, stretch it to 7%, but if you stick to the rule of about 5% or lower, you will be okay in your portfolio over a period of time. So if you look here, we've got 7 stocks here, and let's say we wanted to have a 5% allocation into each. Rather than you having to go and calculate this, Interactive Brokers have a little program in there that will do that for you. So let me bring you into their platform. So a great way of creating that is using the rebalance tool. So the rebalance feature allows you to put orders into the market to buy stocks at certain prices. But rather than you calculating out how many shares you should buy, you can simply type in, I want to put a 5% weighting, for example, into eBay, and it will automatically calculate the number of shares you need to buy. So to get that, you go into New Window, More Advanced Tools, and click on Rebalance Portfolio. So you can see here the rebalance feature opens up here. Now, we've added a few stocks in here just for this example, but we'll show you here. This is our existing portfolio. So for example, we've got the Abvai stock here. You know what the quotes are there. But under current percentage, you can see we've got a 4% weighting in Abvai. In ADS, we've got a 2.2% weighting. In Cisco, we've got a 3.06% weighting. So we just took 3 of the stocks that we're interested in. We've taken in eBay, we've added that in here. So if you want to add a stock in, for example, we'll say Qualcomm, you just type in down here, QCOM, hit return, and you click on stock. And you can see that gets added in here. But there's a 0% weighting. We don't own that in the portfolio just yet. So let's say you wanted to allocate 5% to any of these stocks here. So with eBay here, we click on 5 and hit return. With Honda, we click on 5, hit return. Novartis, we click on 5 and hit return. So this is our target percentage. So this is under target percentage here. This is what we want in each of these companies. It's just 5% of our overall portfolio. So the last thing we do is click on create rebalance orders. So that's going to start creating the orders for us. So the system is now calculating how many shares we need to buy. So the first order ticket pops up here, and you can see it's for Novartis. And we know that we want to buy Novartis at $70. So it's saying the quantity we want to buy is 74 shares. So it's calculated how many shares. We're going to put in a limit price of 70. And the last thing we need to do is change the time in force from day to GTC. Because as you know, if you leave it as a day order, it'll disappear. The order will disappear tomorrow if the share price doesn't get filled. So we click on transmit. So that's one order gone into the system. Okay, so we click on override and transmit. The next one coming in here is Qualcomm. So it's saying to us here, are you sure you want to go and buy 95 shares of Qualcomm? And remember, the limit price we had here was 53. So we'll type in 53. We'll change the time in force to GTC. We click on transmit. and we click on override and transmit. So now the next one we put in here is eBay. So the system has calculated we need to buy 169 shares. And remember we said we want to buy it at 31. So when we put in these limit prices, what we're telling the system is don't fill us in these shares unless the share price goes down below $31. Okay? So we have that. And then finally we have the Honda. So, and Honda's currently trading at 31.05 there, and whatever, let's say our target price to buy it was 29. We click on transmit, override and transmit. So what you're going to see there now is down here you see all of the orders that we have in the system here during the rebalance feature. So I'll just minimize that window so you can see it down here. I'm going to drag that up. So you can see there we've got 4 orders in there. Roughly these are going to be 5% automatically filled by the market if the share price drops below there, and it's going to be roughly 5%. So that's a much easier way of you starting to position yourself in your portfolios using that rebalance feature. So again, this is Stephen from Share Navigator, just trying to show you some different ways you can position yourself. My favorite way is the short put, but you may not have a big enough account. You may not understand options, so that's fine. So using this rebalance tool, rather than you having to sit there, looking at the screens all day trying to get into the stock, just put in your limit order and walk away from the system. If you get filled, that's great. If you don't, you're no worse off. Okay, thanks for tuning in. And if you have any questions, you need any help, go into the members area, click on the live chat facility on our website. Thanks and bye for now.